to open back up to the VectorVest software, and I'm going to go to our watch list of stocks. Go to the Viewers tab, and the stocks that we're going to talk about today are in a watch list for you. Let's go to Trending Thursday. Let's go find 213. I'm going to put one more piece to that market segment. So we talked about the coronavirus affecting what's going on in the market. We do have a list of coronavirus stocks. All right, if I open that up, they are, and I created this list, I believe that there's 12 or 14 stocks in here. And I want to show you, we've been talking about the coronavirus for a minute. Here's 14 stocks, whether good or bad, that deal with the coronavirus, sorted by our master indicator, VST. I'm going to take this back to last week. Remember we talked about the coronavirus last week? Watch this. Here's the stocks listed by our master indicator, VST, as of last week. I'm going to do a quick test of the top 10 stocks. All right, to do a quick test of the top 10 stocks. Look at that. Look at that. 5 winners, 5 losers. But GNPX went up 74%. That's in 1 week. So we give you these watch lists to take a look at. We've taught you over and over again how to look at a graph to determine breakouts on a graph, which stocks are starting to pull up from a standpoint of cherry picking. But look at that, 4.93% in 1 week on coronavirus stocks. And that's GNPX, went from $1.33 up to $2.31. Almost, what is that? Almost a full dollar in 1 week. All right, so keeping that in mind, these stories that we talk about, these lists that we have, they do work. All right, let's get into our next story. Our next story is going to talk about social media. So I was doing some work on trying to always find my stocks for the upcoming week. Social media was a buzz. Snap versus Pinterest. Which stock is a better buy? With the largest U.S. social media companies coming under more intense regulatory scrutiny, investors in the digital space are looking to diversify their investments and take some exposure to small stocks which don't carry antitrust risk. In this group, we have a short list, Snap and Pinterest, to analyze their current earnings momentum and the possible risks that come with their small size. And we're going to take a deeper look, but we're going to use the VectorVest software to do so. Another social media stock, Zoom. Now, Zoom is something that's sort of like FaceTime, but you get a group of people that get together on cameras, and they're all together there. It's sort of like, again, a FaceTime with a whole bunch of people. As a DJ, one of my Facebook site, we use this. Zoom vaulted 14.9%, and this was on February 3rd. In today's trade for the best one-day showing since June, as analysts say the coronavirus fears appear to drive investors towards video conferencing stock. How about that? So another way how the coronavirus is affecting the market is possibly on social media. Because of the coronavirus, people are talking about it on social media. Let's go over to Twitter. Twitter accelerating user growth will push stock to new highs. Twitter has blowout user growth reaching 20%, 21%. That's a lot of people on social media for Q4. The company is still struggling to monetize the accelerating user growth with only 11% revenue growth in the quarter. So as they're growing, they're having a hard time getting to capture profits or make money on them. I'm not sure what it is. Now, Cool Hand Luke, I'm going to get to that in a second. The stock is attractively priced at forward earnings multiple of 6.7. So we're going to take a look at Twitter. Let's go to Facebook, because interesting that a question came up about a stock being valued at $8. I'm going to talk about that in 1 second, because understanding the value on the stock is what we feel that it's worth. All right, it's not a target price or anything, it's what it feels that it's worth, and it's looking at things like earnings and earnings growth rate to determine what the value is on any stock. Now, this one, Facebook, WhatsApp hits 2 billion user milestone. Man, and you know what though? That's about 500 million shy of Facebook's monthly active users. Man, WhatsApp is kicking it. Carter Hall, which is the CEO Journal WhatsApp would continue to operate largely independent of its parent company. So even though it's under Facebook, it is on its own. Facebook left it on its own entity. And man, are they kicking butt and taking names. All right, they are kicking butt and taking names. So Facebook, and let's go take a look at those stocks, all right? So I brought up the stories on those social media stocks. Let's go bring up those stocks in my list. Here's the list. We're gonna look at about 14 stocks, actually 12, because 2 of them were the, oops, wrong one. Let's go to mine, back. There we go. So we have 16 stocks today. We're going to say it's 14 because 2 of the stocks in here were the spiders and the VectorVest composite. So let's go look at those social media stocks. Facebook, take a look at Zoom, take a look at Pinterest, take a look at Snap. Was there another one? How many do I have? 1, 2, 3, 4. I'm missing one. Twitter. There we go. So let's analyze these stocks real quick. Let's analyze them real quick. Facebook. At a price of $210, value of $242, nicely undervalued. Remember, our mantra is to have you in safe, undervalued stocks that are rising in price at this time. Now, so someone asked me and said, man, one of these stocks are at 8% or valued at $8. Let me tell you, Zoom is trading at $87.26. VectorVest has it valued at $8.36. So what does that mean? Well, that means that we feel the stock is only worth $8.36, especially dealing with earnings and with their earnings growth rate. Here's their earnings growth rate at 19%, which is great. Their earnings per share is 29 cents on a $87 stock. All right, so they are growing it at a clip of 19% a year. And if we're going to go take a deeper look at it, I want to show you something. Utilizing our proprietary indicators, RV, which looks at the stock's long-term price appreciation. Right now, Zoom, based on all of these are based on a scale between 0 and 2. Zoom is below the value of 1. Long-term. I wouldn't, and I got to stream this. Let me, I did look at that. Let's do this again. Thank you for that. Let's go find Facebook. I was back in time. I did that, sorry. Zoom, Pinterest, Twitter, Snap. All right. Facebook, still undervalued. Zoom, still over its value. Because it's overvalued, it means that people are willing to pay a premium to own the stock. Now, that long-term price appreciation is below the value of 1 and way below the value of 1. Zoom right now is not a stock that I want to hold for the long term. The next fundamental indicator, relative safety, below the value of 1 is 0.73. Relative safety looks at the stock's consistency and predictability of company financial performance. Does this company meet or exceed its earnings expectations year over year, quarter over quarter? I'm going to tell you that when earnings comes out, most likely the stock may or may not meet its earnings expectations. What drives a person to buy a stock? Stocks that consistently go up in price. Stocks that consistently go up in price are stocks that consistently meet or exceed their earnings expectation. Now, I will tell you this, though. RT, which is our technical indicator, looks at the short-term price trend of the stock, cast on a scale between 0 and 2, nicely above 1. This stock is moving up right now. So, the stock is overvalued. No good upside potential. The safety or risk of the stock is high. Not good, safe stock, and the risk is high, but the stock is moving up. Based on this analysis, I can tell you that this is more of a trading stock. Pinterest, also over its value. Upside potential, not there. Safety, not there. But the stock is in an uptrend. This is more of a trading stock. Twitter, 37.24 above its value. Notice that the only one that I can see in this list from social media that is an undervalued stock is Facebook. So if I'm looking at any of these stocks to take a look at, let's right click. Let's view the stock graph. Let's start from here. Looking at Facebook, I like the upward move. I'm going to draw a trend line from the lows, connecting the lows. Oh, really? Connecting the lows. Stock is in an uptrend. Let me make that a little darker so you can see it. Stock is currently in an uptrend, pulled back to this level of support or a level of a trend, moving up. Nice upward move today. Let's put it on a 3-month graph. I like the earnings per share. definitely higher than it was 3 months ago. Volume is okay, pretty much capping out at about 10 million shares per day. But nice open candle. I'm using 3 and 8 exponential moving averages. How about today they crossed? Not only that, the stock is back to a buy recommendation in the software. Let's go to the next one. Next one is Zoom. So even though I said that Zoom is more of a trading stock, the 3 and the 8 crossed back here. Let's go look at that. Crossed back here on 1/30 of 2020. Earnings is higher than it was 3 months ago, but I do understand based on the fundamentals that it's not a fundamentally sound stock. Doesn't mean you can't buy it. Looking at the 3 and 8 exponential moving average, where's the stock's price stopping right now? Right at resistance. There's that resistance level of $93.09. VectorVest will automatically draw resistance and support for you. It recently broke through 2 levels of resistance, now approaching a third. But the stock, nice open day, a little bit of wick at the top, but nonetheless, if you're in it, leave it alone. But I now know because it's more of a trading stock, I will adjust my stops on that stock. Next stock, Pinterest. Look at it, falling down. 3 and 8 close to crossing. Volume is pairing off. Earnings is higher than it was 3 months ago, but they have negative earnings right now. Next one, Twitter. Nicely moving higher, like that the earnings is on the rise, but still lower than it was 3 months ago. Open candle today, the 3 and the 8, even on the pullback on Twitter, kept you in the stock. But again, I know that fundamentally sound is not there, but Twitter is moving at this time. And the last stock, Snap. Woo! Look at that. Snap, the 3 and the 8 crossed to the downside on 1/31 of 2020. Would you rather get out here if you got in here to capture your profits or wait for it to rebound? So this is why we use moving average crossovers. Whatever moving averages you're comfortable with, you use. But use some semblance of moving average crossovers. And there it is. That getting out on that 3-8 crossover there would have saved you from this big down day, which created a level of support sitting at $16.08. All right, anybody have any questions? Warren Buffett would turn in his grave if he were dead if you bought that Zoom. Listen, I want to tell you that as we look at these stocks, some of these stocks are trades. Some of these stocks are longer-term investments. This is why analyzing the stocks through VectorVest helps to give you a better perspective on which it is. Is it a trade or is it a longer-term investment? So Cool Hand Luke, I'm with you on that. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.